But yeah, let's jump right into it. I've got Captain Jack Bearow, head of DeFi from BERACHAIN. He's joining me today to chat all things BERACHAIN. I'm sure we'll try blend in a bit of meme stuff as well. I guess thanks for coming on, bro.
Of course, man. Thank you for having me. Yeah, I think this is probably not something that most people in the Bera eco know, but I've done more than my fair share of meme trading in the past too. I think it's Rahul, who you interviewed a while back, like he and I are pretty close and are in a couple of group chats together. And we've done the rounds for sure.
How's your time trading memes and like your split been working on Bera, coming into launch, and especially in like the current state of like daily runners and I guess general feeling of like extraction and things being a bit quieter recently?
Yeah, it's funny. Like I feel like right as Bera started ramping up was right on the tail end of where I feel like the last meme cycle run kind of ended. And so, like the last 6 weeks, 8 weeks, I haven't really been trading anything at all in the trenches, which looking at my GC seems like it's been a fantastic call. Like everyone's just been getting farmed nonstop. Yeah, man. It was like, I think the current cycle was a lot of AI stuff. I think went pretty well from a trading perspective. Not going to lie to you and say that I didn't round trip like 90% of it, but it was, always a good time. And then I think pretty recently, a lot of the kind of like mindset switched from more PvE to PvP. And it feels like there's nothing that's kind of sticking from like a local meta perspective. Like AI comes back at some point, pretty played out now on the agent side, and the animal memes cute cycle is over. Poor Rahul. And yeah, I think we kind of just need to see what sticks next. People need to make some money first.
What do you think the intersection of like memes and DeFi is, and maybe more specifically on BERACHAIN?
That's an interesting question. So I think the actual, like if I had to give like a one-word answer to that, the intersection of memes and DeFi is probably this application called Exponents that should be launching in a few weeks. Exponents is basically, you can kind of think of it as like a perp platform that uses Uniswap liquidity under the hood, V3 style. But what that basically allows you to do is like recreate a perp style payoff for any asset that has a V3 position without an oracle. And so you can think of it as like, I want to go long or short this meme coin on leverage. Don't need to wait for an oracle to set up. You can do it kind of on like any amount of liquidity. And then within DeFi on BERACHAIN, you get like this added layer of being able to incentivize people to go long or short a position too. And so you can get these like pretty fun PvP metagames, I think, going, which is like, not only am I going to incentivize you to go long my coin because that's good for me, if I have beef with this other community, like I can actually incentivize you to go short their shit as well, which I think makes for like a pretty interesting dynamic. And other than that, from like DeFi X memes, I think in some capacity, like a lot of the farming meta and early speculation of DeFi stuff, when you see those like phone number APYs, like that's the equivalent of memes for DeFi, right? It's like, I'm going to take a gamble on some highly speculative, like low market cap coin that's super reflexive because I'm getting all of my yield in this coin as well. And if it does well, I'll do super well. And if it doesn't, like I'm going to probably lose a lot of money. But the nice thing is sometimes in DeFi, unless there's like a hack or something, you can always get your principal back. And so it's a little bit better than memes, which are like moderately better than sports gambling, maybe.
And I guess specifically in terms of like exponents and some of those like yields on Bera, like what is the incentivization on the other side to like, or I guess on both sides, taking some of these trades, of like memes potentially with exponents? And like, how does this differ? I don't know if you remember or you're familiar with like dumpy.fun back in the day, but I think they were kind of trying to do a very similar thing on Solana, but you kind of run into this issue of like it being a permissionless or not process in the sense that they had to add everything manually, and also liquidity issues around, like how big can you actually make these positions and like how do you then unwind them afterwards and stuff like that.
Yeah, so the nice thing is two things. The first is that this, Ryan will correct me if I'm wrong, but this should be completely permissionless since it's just built on top of UniV3 liquidity and there's no oracle setup or anything like that needed, like I mentioned. And so I think like it should have an advantage in terms of like, I think you can kind of think about it as like Uniswap type platform where you can just launch a pool among like a given set of different options for any asset, right, generally. And so it's basically that, but with like some different math on top that recreates the perp payoffs. And then the nice thing too is that liquidity shouldn't really be relevant, right? Because like within Uniswap, you're initializing within a range. And then you'll always have liquidity within that range, so to speak, right? And so as a result, like you'll always get a fill. The question is how good your fill will be, I guess, which is always true if you're swapping size into like a smaller market cap coin. But you add probably like even a little bit more reflexivity in there with like leverage added into the mix, and it starts to get probably pretty insane. That said, right, like I think something I've said for a while, and maybe you'll disagree with it, maybe you won't, but I've always said like thin liquidity for meme coins is not a bad thing up until a point, right? Like I would say up until maybe 25 to $50 million market cap, having that like really thin sub 500K liquidity is actually probably really good, because what folks want and are chasing on the meme coin side is like they want fucking volatility, right? Like they want to see the number going up super fast. And the thicker your liquidity is, the less like an incremental sell moves it down, but like also the less it moves, an incremental buy moves it up, right? And so like when volatility is the product, you actually want to like maximize that within some like range of reason.
But in terms of this using the Uniswap V3 type liquidity, is it taking it from the original meme pool, or is it creating another one specifically for the perp?
So the answer is, I think it probably depends on the setup. So if you like launched into a general kind of meme coin launchpad, you would need to set up another one, right? Because the meme coin launchpad has like this Uniswap V2 style liquidity. And I think for Exponent specifically, you actually need to have the liquidity on the platform, and you can't necessarily take any existing like arbitrary UniV3 position. But I think that's like also pretty solvable in that for BERACHAIN specifically, I guess there isn't like a depth of mindshare on launching meme coins on any specific platform, and especially not any that have gotten any exit velocity meaningfully. And so to that extent, right, like what you do as a meme coin launchpad is you just integrate exponents as like one of the bonding curve options on the meme coin. And then you can actually probably just launch it straight on exponents out of the box. And you can think of that as like potentially like a moonshot light listing, right? Where like you get some extra distribution, you get some leverage, you get some tradability that some other application could even abstract away into like an app or something like that. And, there's no other kind of work that needs to get done.
Interesting. I mean, I guess in terms of also like functionality around some of these memes and the yield, something I was just thinking about is, since projects can apply to get whitelisted to kind of like, I guess if you're calling it validating for BGT rewards to distribute to people based on certain POL stuff, could basically every meme on Bera apply to get whitelisted so that they can all by default basically have a staking at least product, and people stake and then they can give out some BGT rewards, something like that?
Yeah, 100%. That's super trivial to do, honestly. As long as they have a staking contract and it returns a receipt token, basically like which every one of them should, saying like, hey, this is your ownership of this meme staking. Yeah, you can get that whitelisted through governance. I think a lot of folks think it will be a lot harder to get through governance than I suspect it will be, right? Like at the end of the day, I don't think anyone fully knows what it'll look like at scale yet. But if you think about it from this perspective of within BERACHAIN, validators have to give away their block rewards and they will want to make money off of them. A validator's incentive is to actually take in any whitelisting request that isn't directly malicious to the ecosystem. Because the more whitelists they have, even if not every, like let's say not every meme coin that has a whitelist is incentivizing stakers every single day, that every day that they are is still money that like validators would be leaving on the table by not whitelisting that asset, right? And so a validator doesn't necessarily have to always take that meme coin's incentive for BGT, but having it as an option, right, is like it's just pure optionality for a validator. There's no reason for them not to do it.
So let's say a meme coin gets whitelisted and it starts earning some BGT. Let's assume that a bunch of like validators or guys generally bullish on them, want to vote on them, want them to get BGT because they want to have them give it to their stakers, their users. Do they, just as a more question for people listening, do they have to give away the BGT rewards, or could they kind of give them to themselves? Like, could they buy up the meme coin themselves, deposit it in them? If they had a bunch of BGT, like in the first place, they could like vote on their own thing to get the BGT in the first place. almost like give it to themselves and like use this as a mechanism to
So you're talking
basically
about
burn
like
it and
they
mint Bera.
as the validator?
I guess they as the meme coin founder in this case, the dev.
Yeah, I suppose they could. So there's a couple things here. Like one, that's kind of the point of governance in some capacity is like if someone's submitting a request for like one of these BGT rewards vaults, and you know that's kind of a lot of times these things are hidden in plain sight, right? No one that is actually malicious is oftentimes that smart about like their malice at the end of the day, especially when it comes to meme coins in my experience. And so like I think a lot of these things are designed to get caught by governance. And if like the request for the rewards vault is like clearly bad acting, then it just won't get approved. That said, right, like I think in this universe where you know a meme coin is doing this, you can always think about this as a value exchange, right? And so it's the question isn't always only just like how does the meme coin get BGT on its staking contract? It's also what does the meme coin give back to the validator to get that? And in this case, that meme coin would have to incentivize the validator realistically with more of the meme coin. And in that universe, you know, the validator would probably see that this meme coin was just continuously like dumping BGT for Bera and burning it and not doing anything with the coin. And, you know, if someone like, let's just use a super simple example, actually. Like, let's say OX.FUN launched a coin and came to BERACHAIN, right? And OX.FUN wanted to incentivize people to launch coins on the launch pad, right? They could actually set up a rewards vault for that on BERACHAIN, and anyone that would launch a coin would get some BGT streamed to them, right? And if OX.FUN incentivized that with their coin, their hypothetical future coin, then a validator would probably value that super, super highly, right? Because that's like a very well-known brand, a very high quality asset. It'll probably have really good liquidity. And so OX.FUN could maybe say, you know what, validator, I'll give you 50 cents for every dollar of BGT you give me. And that would be a good deal for both of them. I like both of them would be happy. If like some random, you know, if Nico coin comes out and you're going to a validator and you're like, hey brother, give me some BGT, man. Like, come on, I'll give you some of my Nico coin in return. That validator is probably going to look at you. And especially like if you're a small coin, you know, 100, 250K, 500K market cap, right? They're going to look at you and be like, all right, for every dollar of BGT I give you, I want $1.20 of your coin because there's no liquidity for it. I don't know what I'm going to be able to get for it. And from an end user perspective, right, like what would people rather get as yield for staking Nico coin? Would they rather get like Bera/BGT or would they rather get more Nico coins, right? I think most people probably prefer Bera/BGT. And so from the validator's perspective, they're charging you for distribution, right? You get more distribution because you'll acquire more users via that. And so they can actually upcharge you. And so you also have this result where like the more valuable a project is, or the more it is perceived as being valuable by a validator, the greater the negotiating leverage that an application will be able to have. And like I think that's actually like a good design, not a problem.
I think that's really well put. I think some of this stuff doesn't necessarily have to be malicious in the sense of like trying to get these BGT for themselves. But I see an interesting angle where they could get this BGT, they could sell it for Bera, and then use the Bera to buy back their meme token. And like,
that's actually a super viable strategy, by the way. I'm actually pro that, right? I think like folks that want to do buy and burn or loop based models with their BGT, super cool, right? Like I think that's actually what like a lot of yield compounding will do from a DeFi perspective. I think there's a super viable route to go there. I think like what you'd actually even want to do probably in this universe for any meme folks thinking about how to do this is you'd probably actually want to go that route, but rather than just burning your BGT for Bera, you'd actually probably want to stake it into a liquid BGT platform like Infrared Finance. Because right now, iBGT, which is the liquid receipt token from Infrared, is trading at like a 2x premium to Bera, right? Which is the floor for BGT. And so most of the time, BGT will always have an implied premium to Bera. Well, it should always have it at least be flat, right? Because you could always burn it. But as a result, like it will then usually also have a premium. And you'll just get better ROI on this design if you sell it into iBGT rather than just burning it to Bera.
Where is this premium coming from right now?
Yeah, so the premium's coming from kind of two things, right? So like BGT is a like yield bearing asset, right? If you delegate slash stake BGT, those are the same thing. It's just like a language thing. If you stake BGT into a validator, you basically do revenue sharing with that validator as well as with the ecosystem core dApps, right? And so anytime someone gets charged fees on the native DEX, that goes to BGT stakers. Anytime an application or a protocol pays a validator for their BGT, that goes to that validator's BGT stakers in part, right? So the validator will take a commission, the rest goes to the BGT stakers. Where that gets really interesting is like if you guys are familiar with like Curve or Velodrome or Aerodrome or any of these other kind of like bribe-based DeFi models, it becomes a situation where like if the amount of bribes you're taking in relative to the amount of coins that you have in circulation are very kind of like positively skewed, you're going to get really, really good yields. And then the cool thing about this within the scale of BERACHAIN is that like when you look at it with Curve or Velo or Arrow or whoever, you don't need the CRV token or the Velo token for these things to exist. Versus with BERACHAIN, you're just using the block inflation that would already be happening on a POS network, right? So you're not actually creating net new inflation necessarily. And so the implied premium comes from both that revenue sharing as well as from the fact that you can always burn BGT one-to-one to Bera, right? And so the floor price of BGT should never be below Bera because you can always just burn it to arbitrage it. And so it should always be greater than or equal to. And if the yield is good, it might be way greater than. And so, for example, right now, I'm looking at some of the farms on Bera, you can get like 25% APY on LP fees for LPing wrapped Bera Bitcoin, let's say, right? And then you also earn like 500% in IBGT from Infrared. And then you can stake that IBGT in Infrared for like 750% in stables right now, right? And so the reason there's a premium is because you can stake it for 750% in stables driven by DEX fees that are coming from the core DEX.
Very cool. Very cool. Yeah, I mean, that's actually extremely well put. I'm starting to like come together a little bit more in my mind. A question I was thinking though is that with regards to holding this BGT for more long-term gains, right? It's effectively like it's a very compounding yield token versus like at what point do I consider actually burning some of this because I want to actually cash something out, Like how do you what's your like recommended playbook for like accumulating BGT? At what point am I like, I have enough, or is it never enough?
I think the answer is if you feel as though the premium of BGT to Bera is not sufficiently wide, you can never have enough. And so the way I'd kind of think about it is, look, you would never want to burn BGT to Bera unless like that premium has basically compressed to zero. And the only way that premium would compress to zero is like you are in a market cycle where the rate that BERACHAIN is inflating is greater than the rate at which new bribes are coming into the system, right? And so like think of it as like a very simple balancing equation, right? On one side is like new application or protocol bribes to validators for BGT. On the other side is BGT inflation. In most like flat to bull markets, you should be able to think of it as like a growth startup, right? Like you should be able to, if inflation is 10%, you should be able to grow your bribes more than 10% a year. If you can't, like you probably fucked up somewhere. Versus like there will be these periods, that's on average, but there will be these periods where in a bear market, the value of your existing bribes goes down 50%, right? And even if you're then growing the number of bribes 10% still, like the value of those bribes is going to be a lot lower. That's when you'll want to burn for Bera, right? Because that's when that premium will compress down. That's actually what the system was designed to do, though. Because if you think about what then happens, right? Premium compresses. All these folks are like, I should burn my BGT for Bera. They do so. It creates more supply on the market. But what it also does is it means for the remaining bribes, there's fewer BGT claiming those bribes. And so if you had $1 million of bribes a week and $1 million and 2 million BGT, and then 1 million people burn their BGT, you've actually doubled the yield on the outstanding BGT. And so what that then does is it then recreates an incentive for people to come back in and start doing stuff for BGT on chain again, which means that like, I would think of Bera as having like slightly more volatility within its bear and its bull cycles, but it also has like volatility dampeners through that because all these other chains may end up in a situation hypothetically, right? Where like shit drops off a cliff, and there's no way for it to normalize without just like giving a bunch of incentives out to projects to hopefully kickstart something, versus that like happens naturally at the chain level from Bera.
And so if I wanted to, let's say I noticed that the premium on IBGT is changing based on basically the usage of the chain, right?
Yeah.
Broadly speaking, how could I trade that premium in some way? How could I basically take a bet on whether I think that that premium is going to go up or down over the next like 2 months, for example?
That's a super interesting question. So if I was going to model this, and we may be nerding out a little hard, so let me know if I'm getting too lost in the sauce. But like, I think the super simplistic version of this model would basically be, the variables would be like, one, you would want to have an opinion on whether the rate of bribes to validators for BGT is going to be increasing or decreasing. You could probably get an edge on that by like keeping an eye on things like governance forums and looking at new proposals for rewards vault whitelists. You could look at like ecosystem app tokens, and if they're increasing in value across the board, that probably means the value of bribes is going to accelerate. You'd want to have like some thesis there. The second thing is like you'd want to generally look at the rate of BGT inflation, and so it's increasing at somewhere between like 1 million to 1.3 million BGT a week, something like that. And so you'd basically want to say like, okay, how much is bribes going to be increasing on a weekly basis? How much is BGT going to be increasing on a weekly basis? And then what is the current ratio of like bribes per week to BGT? And so if I'm thinking about it right now, you know, as of tomorrow-ish, there will be 1 million BGT in circulation. If I'm getting 500K of bribes a week, let's say, right, then I'm getting 50% return on the BGT in circulation. Loosely speaking, no. If it's 1 million BGT at $5, you're getting like 10% return on your BGT on a weekly basis, 52 weeks a year, right? And so with compounding, that's like going to be pretty insane returns. And so you're going to say like, okay, that probably means that BGT is slightly undervalued right now. And then you'd basically just continue looking at that ratio, almost like trading like a pair, right? Like trading ETH BTC or something like that. You'd look at that ratio, and then when you feel it has bottomed or topped, depending on which direction you're looking at it, that's actually when you'd want to exit like your IBGT position, because at that point, the spread of IBGT to Bearow will compress. Does that kind of make sense?
Yes, that makes sense. I think I'll need to rewatch this after myself, even like to try to do this stuff. But I think it's very interesting, and like given that, you know, you can talk about the consumer versus more technical like sides of Bera, but like at the end of the day, you know, the technical stuff exists for a reason, and like people need to understand it and play complex games, and them playing those complex games is what actually improves the liquidity and like rates for everyone else on the chain. Similar to people taking the opposite side of a trade on a perp or something like that. Question I have is there a BGT whales chat? And if there is, how much BGT do I have to own to be in it?
Man, that's not, I don't know the answer to that, but now I've never even thought of that. Man, I feel mad left out.
I'll tell you because for Hyperliquid, it's 100,000 Hyperliquid, which is around right now. It's like between 2-3 mil. Yeah.
Okay. Not bad.
So just bear that in mind. Bear that in mind.
All right. I'm going to talk to Kevin over at Ooga Booga, because I feel like this is exactly the kind of endeavor that he would want to get behind. Dang. I'm wondering if there is now, and I'm not in it, which makes me feel pretty bad. Because I'm definitely.
I won't confirm or deny whether I am in it or not. Maybe I started it.
Damn, Nico is in the Bera cabal.
I'm asking the real questions. Last question I'll have on BGT, unless I really think of something else, is what are your general thoughts around the kind of like chicken and egg situation with regards to getting users in order to, you know, get the liquidity, in order to get the BGT, but now you have this BGT, like now you get more users, and like how this basically changes based on size of the projects, how that kind of plays into little monopolies forming. I've seen a lot of criticisms around this kind of thing, and it seems to be the most common question that people ask me. And at first I kept thinking, wow, what a good question. Like, how are the BERACHAIN guys going to have an answer for this? But then the more I thought about it, the more I'm like, actually, this is just how an economy works. Yeah. This is like, it's not actually a bad thing, but I'm still interested to hear like, how you think about it.
I think that's right. I wrote about this once way back when on Twitter, and then proceeded to not think about it for like 6 months. But I think you basically hit the nail on the head, right? Like, it's just a free market, man. We're not dictating anything. Like I said earlier, the incentive for validators is to whitelist. Like that was always the first point of criticism I heard on that front, is like, oh, it's going to be a governance cabal. And so they'll gatekeep who gets new whitelisted rewards vaults. I think that would be an insane thing and like a non-rational thing for validators and governance folks to do. It might happen. I don't know. I'm not in control. I can't puppet master this thing. But like it feels really irrational to me to basically say I'm gonna sacrifice my profitability as a validator to make some like weird opinionated cabal point, right? Like I don't think that's something we really see in crypto super often. The cabal is all about making money. And then second is, okay, so I have a rewards vault, but a validator is not adding me to their distribution, right? And so the way you can kind of think about this is like a validator sets what we call a cutting board, or we used to call a cutting board. I don't remember at this point, but they basically say, here are up to 10 different rewards vaults that I will take bribes from and put BGT emissions onto. And so I think like that's probably the surface area that has the most potential for something, I guess, collusionary happening, in that like a validator could decide not to specifically exclude a group of people. But again, it's like one of those things where you remember on ETH, it was like some validators are running OFAC sanctioning lists and some are not. But that also means even if you're on an OFAC list, like eventually a validator will process your transaction. It's probably the same thing on Bera, but even better, because in this case, you can actually give a financial incentive for someone to process your transaction, basically to process your bid. In that, like, if you're not getting, if you're offering a validator 80 cents on the dollar for emissions, and a bunch of other people that they're friends with are also offering them 80 cents on the dollar, that you might not get filled, right? And so what should you do? Like, you should just go up to 85 cents on the dollar and you'll get filled. And so again, like I think most validators even aren't going to be like manually setting their distributions. They're actually just going to have software that automatically takes the highest bid in this order book every single time. And so if you're not getting filled, it's because your bid is shit or your liquidity is shit, not because there's some cabal against you. And in fact, like the optimal move for a validator, I think on average isn't actually like, I think a lot of folks are picturing it as like, I'm a validator, I'm going to set 10% of my distribution to 10 different projects. I actually think that's not how most validators will run in practice. I think most validators in practice will say like, okay, this block, I will fill the bid on the top of the order book 100% of my resources. And if that one is completely filled, then I immediately move down to the next one on the order book, because that's how you execute, right? Like you execute into the best offer. You don't like randomly take other offers down the order book. And so again, like I don't think it would be a rational thing for a validator to do there. And the final point that I kind of touched on earlier is like, it's rational as well for a validator to say, you are a new project with no liquidity and a small market cap, and I don't know you and I have no social signal. And so, yeah, I'm going to need a higher rate of return for you to get my block rewards. I think that's actually like a pretty healthy functioning system. It's a good way to like prevent value extractors from entering. And from a project perspective, if you think you don't need that BGT for distribution, for solving your cold start problem, whatever, you don't have to use proof of liquidity. Like you are welcome to bootstrap your project the same way you would on any other chain. And I think the right way to think about it for proof of liquidity for early stage projects is like a distribution tool, right? Like I increased my TAM from a user-based perspective. And then for a late stage project, it might be something more like a spend efficiency tool, because you will spend less money for the same amount of incentives because the chain is basically subsidizing its best projects in real time. And so I always kind of think of proof of liquidity as like this like chain level real-time grants program in some capacity too, especially for later stage projects.
And very quick question, just give me a quick answer so I understand this correctly. The way these effectively order books get filled with regards to, validators passing through, whitelist or transactions, or this kind of stuff, is twofolded, because each validator is somewhat competing based on how much BGT they have, correct?
Correct.
And so then on top of that, how does like the block height work? So like if there's one new hot thing and every validator really, and they're paying a lot, they really want this thing pushed through, and all the validators want a slice of this pie, is the block height like infinite? Does everyone just pile in and then it gets the rewards split amongst everyone? Or is it like, can I like snipe that block on that for that reward and assuming that like I get in quick enough and I have enough BGT or the most BGT, like can I fill the block because I have enough? Or like how does that work? Like what's the distribution?
Yeah, that's a good question. So the way that it works is like you will know which validator will win a block slightly in advance, the same way you kind of do on almost any chain. Validators win blocks based off of the amount of Bera stake that they have. And then the amount of block rewards that they have is based off of their BGT. And so there's actually like two separate variables here. And so you could have a validator that has a ton of Bera staked and wins a lot of blocks, but has very low BGT. And as such, isn't able to fill a lot of orders. And you can imagine the opposite as well. And so what ends up happening, right, is let's say your Nico coin launches, like you said, super hype, they're bribing a ton. The first block that a validator can fill there is from me, right, Jack Validator. And so it's only one validator per block. And I have a ton of BGT. Like, let's say I have enough BGT to fill your entire bid, right? I can do that. But the way that you also bid is you'll say, look, I'm giving away this many coins, and I want it to be at least this exchange rate or better in BGT terms. And so you might say, I'll give away 1 million coins, and I want at least 1-to-1 with my coin for BGT. And so, you know, depending on how much you want to get filled effectively, you'll get quoted saying like, this will last for at least this many blocks. And that's that many blocks of emissions. And so depending on like your offer, basically, right? Like how much do I want to get filled at what rate, and how much the validator has to basically take your offer on a per block basis will determine how long the incentives will last. Is probably the simplest way to think about it. Yeah.
Okay.
But
so
one other thing that's
go on.
probably worth thinking about is like right now, validators also have some small delay on how frequently they can change their allocations. I think one of the design spaces that like would be really cool to explore on our side in the near future, and I've already kind of chatted with our eng about it, is like I want to figure out how short we can make that refresh window. Because if you can basically start making it so validators can update their preferences on basically every single block, you can basically have like high frequency trading, market making type situation where validators are actually like rotating their decisions constantly, and allows for a lot of different styles of validator optimization as well. Like you can have algo guys that are changing and optimizing for max economic decisions on an every block basis by looking at like liquidity for assets on chain and all these other factors. And then you can also have like these like venture incubator style validators that say like, I'm going to point my emissions at this project every single time. And someone who's staking BGT with them might get less ROI than with the HFT validator in BGT terms. But let's say like every project that goes through the incubator airdrops 5% of their supply to people that are staking with that validator. And so you have like just a very different rewards profile there too, where like you'll get less yield, but you'll get potentially tokens with a lot more upside.
I'd be interested to know on the technical side, you know, BERACHAIN being, you know, correct me if I'm wrong, but effectively like an EVM compatible Cosmos, but almost like a Linux, almost like what Linux is to like Windows. It's kind of like you've taken a lot of that core infrastructure and then you've like modded it and added all these like different tokens and interactions. How does that kind of like maybe limit some of the stuff? And, you know, did you guys consider building, you know, a more like monad or, you know, other type of chain, and how does that compare to maybe like an ETH L1 versus like an ETH L2 or something like that?
Yeah. So yeah, the structure is basically we're running ETH execution clients unmodified. And so you can run like any of the ETH execution clients like Reth, Geth, Nethermind, Aragon, with probably meaningless for most folks. But basically
I've never even heard
of
any of those.
Yeah, exactly. Like there's zero fucking reason for anyone to know what those are, except for that I had to learn. And so the answer is basically like, if you think about it, most alt L1s that are EVM compatible, or even most L2s, are basically taking a single one of those clients. And then they think of it as like you take a specific engine and then you make all of these mods to that engine to optimize it for your specific use case. But in doing so, you sacrifice some of the decentralization elements for anyone that cares about those, because you isolate yourself into only working on that specific type of engine. And so for BERACHAIN, we didn't make that trade-off, at least for now. We basically left things wide open, and ours works with any engine out of the box. And our trade-offs that we made from that perspective were we just have a slightly smaller val set. And so we'll probably cap at somewhere between like 155 and 256 validators. But in doing so, that allows us to have these, sub 2-second block times, which I would say is kind of like the standard for a fast block time. And we also have like 0.001 cent transactions right now. And so it's like, okay, we want to have it be fast enough, and we want to have it be super, super cheap, and we want to have it feel exactly like Ethereum mainnet, aside from the fact that it's not slow and expensive, right? But like from a developer experience. And so I think we've achieved exactly that. And the nice thing is you can upgrade those pieces down the line. And so if we want to develop a parallelized EVM or borrow someone else's parallelized EVM or work with them to build one or whatever it is, you can just slot that into the existing framework, and you get a lot of these other kind of benefits from the Cosmos based portion. And our innovation was mostly focused on like, how do you actually connect those two things? Like that's actually like a pretty tricky piece of engineering. And then in terms of these comparisons to like a Monad or a Mega ETH or a Sonic or anyone else, right? I think if you think about a blockchain really simply, right? Like let's strip it all the bullshit out for a second. A blockchain from a value perspective is basically equal to like how many blocks does this chain make, and what is the value of each of those blocks on average. And like every chain is basically historically focused on how many blocks does this chain have, and I'm going to increase that number, like chain go fast, good tech, which is totally reasonable. I think we kind of had a different approach though, which was like, look, like let's be honest with ourselves, none of these chains have enough usage to justify making these chains go faster, right? Like we need to create more usage, we need to reward app developers, we need to do all these other things first. And then you can focus on making the chain go faster when you have demand, because you have built a fairly modular design. And what we really need to focus on is how do you give better economics to folks that are building on chains. And that's what BERACHAIN is, right? And BERACHAIN is really directly this chain and this set of tokens that derives value only when the applications building on the chain are successful. And like that was the intention of the design.
Yeah, I mean, I didn't realize you were able to potentially change the structure and like how it works so much down the line. I'm assuming that to actually push those changes, the validators would have to approve, right?
So yeah, basically the way that it would work is if you wanted to change your execution client down the line, you'd probably have your validators, basically switch which client they're running. You can end up in this weird situation though, which is probably what like Solana is going to go through with FireDancer in the near future, which is that like you'll have some validators running this old execution client and some validators running this new execution client that's way faster. And that will create this like, eventually everyone will probably migrate over, but in the short term, it will create this like weird divergence where like you have two people running things that are pretty incompatible with each other. And I've even seen like Solana folks joking about like, this is the perfect chance to like create a Solana hard fork that's like FireDancer only or something like that, to basically just have like a faster network immediately. But yeah, like that moment of transition can be very weird. But as long as you're coordinating it effectively, it's usually not that bad.
Okay, so yeah, like those guys can choose to keep running their like old version of BERACHAIN if they want, or they can come and switch to the new one, which hopefully you'll somehow incentivize them to do.
Yeah, well, it's one of those things where the incentive is very naturally created, right? In that, like, I think after some point of time, if enough people don't migrate over, you end up with like an Ethereum classic Ethereum situation. And the incentive for validators to migrate over is that the non-canonical version of the chain is fucking valueless. And so the blocks that you'll be producing won't have any value effectively, et cetera. And so you'll want to be on the version of the chain that has all like the value.
And so in this case, you said you have right now 100 and whatever validators, maybe 200, whatever. Are those guys who are selected purely based on basically the top 100 or 200 by BGT held / Bera, or?
Yeah, so the way that so right now validation is semi-permissioned, and the reason for that is largely because proof of liquidity is really complicated, as you've kind of been learning, and it's entirely dependent on validators that know how proof of liquidity works. And so there is like a large amount of kind of education overhead there. And we wanted to make sure the folks that were live early on understood what was going on. That will kind of like expand, I think, pretty quickly in the near future here. And you're already starting to see like you can stake into Smiley and Kodiak and Infrared and a bunch of these validators now. And over time, the set will expand pretty quickly. And then when the set is in like its full form, yeah, the active set, so to speak, is determined by the top validators by their Bera stake. And so there's then like this second meta game of how do I get sufficient stake to get into the active set, and how do I retain that stake too?
Yeah, so actually, funnily enough, despite BGT being the technically Bera governance token, actually like Bera is like the real governance token in the end, because like that's the one that controls the validators that get the BGT in the first place in some way.
So Bera is the stake token for sure. BGT is still the governance token. It's like a pretty random niche nuance that I don't think anyone really has to care about. But yeah, the Bera is the stake token. And the reason for that is because BGT is really designed to be like a governance, like think of it as there's like 4 things that tokens try and do on proof of stake chains. It's like stake into a validator, gas for the network, governance, and fee generation, right? That's basically it. Every other chain has all 4 of those things in one token. And so you kind of end up either selecting into doing only a couple of those things really well and kind of like, I do not see the other 2, or you kind of like half-ass all 4, which I think is why ETH has struggled a little bit lately, right? Is like they basically completely threw out the fee generating component, which is like why everyone liked it. And then now they're like a little lost for identity. And instead for Bera, what you do is you like separate those 2 things out into each of their components, and you end up tokens that can serve both of those roles really well. And then you also allow folks to optimize into what they care about, right? It's actually why like Athena works really well, is you have like USDE, which is this stable coin, and then SUSDE, which has this yield thing. And by allowing people to hold either, but having all of them running the kind of like delta neutral strategy in the background, the basis trade, you actually increase the yield for the basis trade across everyone. And by isolating people only into the specific things that they want from it. And so that's like really actually similar in spirit to what BERACHAIN is trying to do with Bera and BGT. And then from your point of view, right, like Bera is very much so the stake token and BGT is still very much so the governance token, because you can imagine a situation where like if someone somehow monopolized enough BGT to push a harmful governance proposal through, right, where they basically say, give me all of the money in the bridge or whatever. The Bera stakers that are actually running validators could just say, no, like that's an invalid block, like that's not allowed. And so at the end of the day, the Bera folks have the right and responsibility to execute on what they see as valid, but their incentives are generally aligned, because like if a validator was doing something malicious from like rejecting actually valid blocks, folks that were staking with them would just pull their stake.
Gotcha. So we obviously spoke a lot about 2 other tokens, but like there is obviously a third as well. But like in my research, and I was playing around with the cookbook on the doc site, which by the way, I think is like genius. I think like every project should have a ChatGPT style prompt on the site where you can ask it questions trained on the docs. I think it's like super good. But I'm struggling to actually see the use case for Honey, right? Because if I'm staking all these other things, which are stables for it, I just don't really see like the unique perspective of like why you need a tri-token model in the first place. Like why not just make it, why can't I just use my USDC as if it was Honey? Why is there just this like other wrapper basically from my perspective, it seems like no reason. What's the reasoning really behind Honey?
All right, so I'll only gaslight you like a little bit here, but the answer is like
I might be stupid. I might
no, you know, you're totally not. Like it's such a legitimate, valid question. Just to be clear, I think that the answer is because in the original design, the original BERACHAIN design, which was, you know, between us, like super fucking overcooked. In the original BERACHAIN design, Honey was like this algorithmic stable that held its peg by the liquidity in proof of liquidity. And then, you know, post Terra and post a lot of the algo stables exploding, we obviously went back to the drawing board and we're like, yeah, that's probably not a great idea. And so the tri-token model is largely like a legacy naming convention, and you're totally right. It's basically just a dual token model. That said, right, like there are some minor advantages to Honey, and I'm not going to sit here and pretend like it's some revolutionary stablecoin design. Like it's in fact like it's actually like the dumbest stablecoin design possible, and that's intentional. Like if you look at all of the chain level dApps, like Bex, which is the DEX, and then Ben, which is the lending market that's coming, that are both like the enshrined applications. Those are also really dumb products. They're specifically designed to have minimum viable functionality, because otherwise I think you risk ending up in like this universe of having a Fed chain, right? Where it's like the only thing you can do on the chain is use the state-sponsored dApps. That fucking sucks for everyone, right? And so instead, it's like, okay, let's offer people some minimum product, which for one thing helps avoid, like you see these new chain launches and the first 20 apps on every new chain is like a dozen Uniswap forks and a dozen Aave forks. And that's because there's no minimum viable product. And if the chain itself were to occupy that design space, there would be no incentive for someone to launch one of those. And so that's kind of the mindset for us. And then for Honey, I think the advantage is, you know, in this universe where you'll have a lot of these like pretty fungible centralized stables of like USDC, PYUSD for now, and then down the line, you know, maybe it's like a BlackRock token, maybe it's USDT, right? Like all these other like super centralized blue chip stables. What ends up happening, if you think about it like this, like if you have a Bera USDC, Bera PYUS, USDB, Bera USDE, right? Like Bera USDT, you have like 5 pairs. You end up getting liquidity fragmented across all of those different pools. Versus if you can aggregate all of those into Honey, then what you have done is re-aggregated all of that liquidity into a single pool that has insane depth. And so you actually create like better execution as a result for users if folks are actually pairing against Honey rather than the constituent stables. And then the second thing is it also makes it easier from an app perspective, because instead of having to focus on all of these different stable assets from a support perspective, you can just focus on one, right? And it makes it much easier. And then as a result, if you're looking for yield, dApps are going to prefer Honey over random constituent stable in Honey. And so the yields on Honey should always be better than the yields on the underlying stables. And so you will choose to migrate your USD to Honey, your USDC to Honey, not because the product is significantly different, but because it's actually exactly the same and the yields are just better.
Yeah, okay, that makes sense. That makes sense. The last thing, I guess I'll just ask you just for fun, I guess, you know, obviously Bearow launched over the last like week or so. I'm sure it was like pretty hectic and stuff. Do you feel like you guys were maybe under pressure to like, you know, launch under certain conditions? Like, you know, what made you decide to kind of keep pushing things back? Like at what point do you feel like it's good enough to go for a launch? Because obviously it still seems like a lot of stuff is not live in the grand scheme of things, right? You know, just what was it kind of like leading up into the launch and dealing with, I think, a lot of pressure? Because like generally sentiment in the space was like, these guys are taking too long to launch this. When's it going to launch? It's like keeps getting delayed. And then like when it launched, people are like somehow unhappy that things like not as good as they want it to be. It's like, seems like a very hard thing to deal with.
Yeah, man, this isn't my first chain launch. Fortunately, it's always one of those things where, except for very, very rare scenarios, it's like, what's an analogy? Here's an analogy for you. It's like, you know how the night before you have like a big event that you've been working towards for a long time, like you sit up in bed, like tossing and turning and like you're visualizing it. And then regardless of how good the thing goes on the next day, it's always different than what you dreamed it would be, right? That's what like a TGE is. And so as a result, like you have all these folks that think it's going to be like that for weeks or months, or in our case, even years, right? Like these people have been building this shit up in their heads over and over and over of like, this is going to change my life, man. Like this is going to be the one, right? And then regardless of how well you think you executed and how much work you did, like it's impossible to live up to that, right? And I think in this universe where if you look at like the various test nets, we have like the most used test net in history. You know, Monad probably ends up beating that in a few weeks here. But, you know, we had 1 million users in like 4 days on testnet v1 and it just fucking broke. And then testnet v2 went a lot better, but eventually like it got enough load that it broke and we had to go back to the drawing board again. And so like part of the reason this took so long is because Cosmos is kind of a piece of shit sometimes. And so we ended up having to like replace elements every single time. And you know what? Like, chain launched, we had a shit ton of users and everything worked perfectly, right? I think like from my perspective, from like a core blockchain perspective, I think that's like about all you can ask for. And, you know, I think there were things that in hindsight, if we were to go back, that I definitely would have done differently. But given how much we actively try to not do what everyone else is doing, like we could have gone the super safe route of like, okay, I know these folks are do this on launch and this goes fine. I know we can do this on launch and this will go fine, and just slammed it bang down the middle of the fairway. Like, that's just not who we are then. And we would rather take risks and try and do something cool and fun and exciting. And, you know, a side effect of that is sometimes you miss the mark a little bit. And sometimes you execute on 90% of what you were hoping to do. And the last 10% was like sufficiently pissing people off that they kind of ignore the first 90%. And it's a tough balancing act always. And all you can do is, you know, we've been around for 3 years. I think if anyone thinks that like 5 days or 6 days of people yelling at me on Twitter is going to get me to give up on anything that we believe in built, like they're a little crazy. And so, you know, our mission remains the same. It's like build cool shit with people that are cool. And that's pretty much all you can do.
Hell yeah. Do you want to direct anyone to anything in particular, or any particular, you know, in terms of not even just learning, but just like cool things to check out, like get started? For example, like I think like the steady teddies are like pretty fucking cool.
Steady teddies are super cool.
Steady teddies are dope. And yeah, just anything you want to direct people to. I mean, Bera is pretty complicated, so, you know.
Yeah, I'll direct folks to a couple things that I think they might enjoy from the listeners of this pod, especially. And, you know, I apologize for ranting on about DeFi and mechanism design to all of the meme coin traders out there, but I hope you didn't hate it. Look, like I think steady teddies are awesome from a cultural perspective. I think the Bera baddies are awesome from a cultural perspective. Like what they have done in terms of like onboarding net new users to BERACHAIN has been insane. Baby Bera is an absolute monster. He throws the craziest parties I have seen in crypto. And the really cool thing is all of these people that we are talking about are entirely independent from the BERACHAIN Foundation, right? Like I think a lot of folks think that we're over there like puppet mastering all these folks, but we really just have like a community of people that are really excited about what they do. On the eco side, I think for like the meme trader side, Panda Factory from Kodiak, Meme Swap, Exponents, like there is some work being done there. I do think that a lot of it is still a cultural thing, right? Like if you get a lot of DeFi folks in a room together, they don't necessarily have that like in the trenches cultural mindset. And I think folks like Shogun and Rahul that you had on are going to be a part of helping bring that to BERACHAIN in a meaningful way. I would check out the BERACHAIN ecosystem page because our dApps are what we really kind of make us special, I think. And then we also have some really cool chain abstraction tools that we're working with, like Infinex, that can make it easy to get on board to the chain. And then DApp, which has built this site called Bera.town. And so if you're someone that doesn't have any idea where to start on BERACHAIN, doesn't really know that much about DeFi, whatever, go to Bera.town. It basically has everything you'll need in one place. It has swaps, it has bridging, it has a bunch of applications that you can try out. It has like a mini questing system built in, and it effectively allows you to access all of these things in one place. And then as always, I would definitely check out like Janny and the Honeyjar folks for education, Honeycast for podcasting stuff. Like the eco is insane. Like there's 250 plus projects. And so I'm always doing them a disservice, trying to rattle off a list of 15 names at the end.
Yeah, bro, honestly, like well done to you guys. I think you've done an insane job. I think like despite anything about like Bera token price or like things not being fully done or like some things not released, like in, you know, over a long enough time horizon, I think like a lot of this stuff is going to play out in a super cool way. I think you guys have done a lot of stuff extremely uniquely. And I think that actually like considering all that, I think a lot of the kind of bad like sentiment is like somewhat unjust actually. And I think people just need to be a bit more patient in some way. I remember like a couple cool things. Like I think I was at ETH Den like last year or the year before. Like someone handed me like a joint in a little tube, and it had
2
like
years
some,
ago. I remember those.
Branding, like a blue one with Pepe's on it and stuff. That was pretty cool. And yeah, I just think that BERACHAIN seemingly like has something for everyone. So I wish you guys the best of luck. I advise people to go check it out. I had some good fun, not only like researching it leading up to this and much prior to planning to speak to you, but also on this call as well. So thank you very much for coming on. This has been awesome, and I hope people enjoy.
Appreciate it, man. Yeah, it's been a good time. Thanks so much for
Oh
coming
yeah,
on.
thanks, man.